Evening, everybody. It's 5:15, and this is your closing comment for today. And there will be no daily note tonight. I'm leaving here as soon as I finish doing this, and I'll be out for the evening, as if anyone really gives a crap. Okay, so Dow down 458, NASDAQ down 314. That was the big loser, 2.84%. It was down as much as 4%, I believe. And the Dow rallied about $200 off its low. The S&P down 78 or 2.1. The biggest winner yesterday, the Russell, was down 40 today, 2.35, and the transports were down about 200, and that was 1.6%. The VIX was up, but only slightly. It wasn't up today as much as it was down yesterday. But what you have to understand is just how desperate a move that was yesterday. It's obvious that something is failing there, and frankly, it has more to do with the public and pension funds, etc., that if those prices in the long gilts were to be marked to market, they would probably show insolvency. And so what they did was they decided to not issue new gilt in an auction, and instead turned around and did their version of QE. QE infinity. All they did was buy the long bonds, inject the money, and drive those prices up. Now, the pound was actually up again today. Certainly nothing like yesterday. I mean, you can see how we have been in just a constant fall. We got down to 104. Yesterday we went from 105 to 109, and today we continued up to 111 and a third and closed at 110. So 110.64, so almost 111. It's even more extreme looking when you look at it versus the US dollar, because we were down almost 3%, my recollection from yesterday. Okay, so we had a high yesterday of 114 and 3/4. We closed 112 and change, and then today closed basically unchanged, down 30 cents. But that puts us at 112. That puts us a solid 2 3/4 off the high just from yesterday. So the markets didn't like it when they finally realized. I mean, what happened yesterday was an intervention. Interventions do not last, and nobody is bigger than the market. I've discussed the size of the Forex and the bond markets, and so they can drop a big rock in the pool, and it will move out, and but the further it gets away from where you drop the rock, the lighter it actually is. So that's kind of where we are. The bad news in the market today was primarily Apple was downgraded by Bank of America. Yesterday, it had been down about 6. It rallied back to being down only about $2. Today, it was 142.48. That was down $7.36, or just short of 5%. We also had earnings from KMX. This morning, when I did the opening video, it was 75.92, down 10, and that was down 12%, and that looked rough. In point of fact, it finished the day at 65.15, down 21 1/4, or a solid 25%. I mean, that's a huge move. And after the close, we had Nike earnings, and they beat by a penny, but their margins collapsed by 2.2%. So they have down margins, and it turns out they have excessive amounts of inventory. And you would think that a company that cut Foot Locker and everybody else out of the retail and started going direct to consumer would have a little bit better read on what their margins are and what the inventories actually look like. So uh, Nike had closed the day at 95.33, down $1.69. The earnings came out afterwards. The last I have here is 89.89, down $7.13 or 7.3%. But realize that a year ago, Nike was 180, and today it's under 90, a 50% move to the downside on, frankly, what is like Starbucks or Apple, some big institutional cult following that's now down 50%. I mean, the Apple is down, but my attitude is, so what? It's down from a high last month of 176, so 141. So that's 35 points. 35 on 170 is nowhere near 50%. And the stock just made an all-time high in January at 183, 182.94. So clearly not as damaged as Nike is, or CarMax. Also, MU reported there's nothing going on there, up a penny, down a penny. Tomorrow we have personal income before the open. We have Chicago PMI at 9:45, and we have final read Michigan consumer confidence at 10 a.m. So just go through these quickly. The grains were, as a group, lower. Oil was down a little, but after yesterday's move, that's pretty decent. The low was 80.34. We closed 81.21. So I closed $1 off. We closed kind of almost exactly mid-range. Nat gas was down. Evidently, usage will be down in places like Florida. Florida uses a great deal of nat gas, and everything is offline. So long-term, it's bullish. Short-term, could be a little bit of a problem. Gold was down $1.40 after being down 22. The silver was down 17 cents. And it had been 25 cents lower also. Copper was up 6 cents, so pretty decent there. Cattle was up, hogs were down. In the softs, we had another big day down, $3.33 in the cotton. That's actually been a pretty extensive move here. We tried to rally back up, made a lower high, and since then we've come from 120 down to 85, and we are testing the lows on that decline at 82.54. We closed at 85.16. So we're getting closer, and at $3 a day, it could be there tomorrow. The dollar, as I said, was down about 30 cents. Bitcoin down. Ethereum basically unchanged, down $1. The pound was up. The Japanese yen was lower again. And that's about it for the night. Have a good one.